Bitcoin recovering from a fall below 30,000, but analysts warning BTC could fall further still. This is Coindesk Daily. Bitcoin losing nearly all of its gains year to date. The price recovery from a dip below 30,000 last night is giving newcomers an introduction to the volatility of BTC. Craig Erlam, senior market analyst at Iwata, telling clients a break of 30,000 could have been bad news, but it managed to turn things around. We may see a small rebound now, just as we did earlier this month, but the price action we've seen this month suggests there's some nervousness around these levels. Ki-Young Ju, CEO of crypto data firm CryptoQuant, telling Coindesk that the low of 28,000 seen earlier may not be the bottom. He highlighted a negative Coinbase premium as evidence of weak dip demand from large investors. CryptoQuant's Coinbase premium indicator measures the spread between Coinbase's Bitcoin US dollar pair and Binance's Bitcoin Tether stablecoin pair. A positive spread implies strong institutional inflows, as Coinbase is considered synonymous with high net worth individuals and institutional investors. Currently, the spread remains flat to negative, implying a lack of dip demand from big traders. A drop in the GBTC premium, which measures the difference between the value of Grayscale Bitcoin Trust's holdings and the market price of the holdings, is another bearish factor to consider. The premium has shrunk in recent days, a sign of weakening institutional demand, as many institutions invest through the Grayscale Bitcoin Trust for regulatory reasons. Note to viewers, Grayscale is owned by Digital Currency Group, the parent company of Coindesk. On Wall Street, U.S. stocks sliding in Friday midday trade as U.S. President Joe Biden is set to sign executive orders on food benefits and workers' rights. European shares also falling after European Central Bank President Christine Lagarde saying the pandemic still poses serious risks and that ample monetary stimulus remains essential. JP Morgan strategists noting that Bitcoin is highly correlated with traditional markets and the general mainstreaming of cryptocurrency investing is potentially converting them from insurance to leverage positions. Looking at our top stories, after winning unanimous approval from the Senate Finance Committee Friday, U.S. Treasury Secretary nominee Janet Yellen is expected to be confirmed by the Senate. In written remarks to the committee, Yellen, referring to cryptocurrencies, I think we need to look closely at how to encourage their use for legitimate activities while curtailing their use for malign and illegal activities. If confirmed, I intend to work closely with the Federal Reserve Board and the other federal banking and securities regulators on how to implement an effective regulatory framework for these and other fintech innovations. Yellen's comments are more nuanced than earlier this week during her confirmation hearing. Have a listen.
Cryptocurrencies are a particular concern. I think many are used, at least in a transactions sense, mainly for illicit financing. And I think we really need to examine ways in which we can curtail their use and make sure that anti-money laundering doesn't occur through those channels.
Meanwhile, the Tether Bitcoin pumping scam debate is alive and well. The CEO of Deltec Tether's Bahamas-based bank telling Unchained podcast host Laura Shin Friday that the company's stablecoin is fully backed by reserves, downplaying resurgent fears about the cryptocurrency's integrity. USDT's market cap has ballooned from $4 billion to $24 billion in the past 12 months. Reserves are said by Tether's website to include traditional currency and cash equivalent, and from time to time, may include other assets and receivables from loans made by Tether to third parties, which may include affiliated entities. Fears about a shortage of backing resurfaced last week after an anonymous Medium post cautioned that Tether represents a worrisome portion of Bitcoin volume and doesn't seem to be backed by adequate reserves. Kraken growth lead Dan held denouncing the claims in a lengthy response of his own, saying the author used data that is incorrect or misleading. And finally, business intelligence firm Microstrategy is buying the dip, scooping up $10 million worth of Bitcoin on Friday. CEO Michael Saylor saying in a tweet, the purchase conforms with MicroStrategy's Treasury Reserve policy, and the firm now holds 70,784 Bitcoins, which at today's price represents over $2 billion. You can read more and check our videos, podcasts, and newsletters online at Coindesk.com. For Coindesk TV in New York, I'm Christine Lee.